Tesla did it. Tesla met the very last prerequisite in order to be considered for the inclusion to the S&P 500 index. Many analysts were forecasting that Tesla will report a loss and will not be able to meet the revenue requirements. However, Elon Musk, typical for him to shock everybody, delivered. Let's talk about what that means and the impacts for Tesla, as well as how this will likely reflect on the stock price. Welcome to another episode of Investing with Kurt. In the last video, we talked about how close Tesla was to be included in the S&P 500 index. We went over all the requirements they need to meet and how that decision is being made. So if you didn't see the last episode, you can pause this one and watch it first. On Wednesday, July 22nd, Elon Musk announced the financial results for the most recent quarter. All eyes were on him and what he would report, because to be included in the S&P 500, not only must his company have netted a GAAP profit over the past 4 quarters combined, it must also record positive net income for the most recent quarter. Analysts estimated that Tesla will report a loss of more than $377 million for the quarter, but quite the opposite. Tesla beat those expectations. Tesla reported a profit for the 4th straight quarter on Wednesday, surpassing a key milestone, allowing it to be considered for the S&P 500 inclusion. The company reported net income of $110 million for the second quarter, with a net profit of $104 million, which it attributed to fundamental operational improvement, as they say. On the earnings call on Wednesday, Musk also announced that Tesla will be building a factory near Austin, Texas. The company plans to dedicate its Fremont, California plant to produce Model S and Model X vehicles for all markets. However, the Texas factory, Musk said, will be used for production of the company's Cybertruck, Model Y, Model 3, mostly catering to the eastern half of North America. So as of Wednesday, Tesla can be officially considered by the S&P 500 committee to be added to the index. The S&P 500's committee does rebalance the index each quarter and could swap companies in and out during those quarterly meetings. Let's see when they actually do that. So what does it mean for Tesla to get into the S&P 500? It is treated as a proxy of the US equity market. The index covers approximately 80% of the available market capitalization. Let me play you a short clip from CNBC where Tim Higgins, a reporter from the Wall Street Journal, explains what this means for Tesla.
Tim Higgins from the Wall Street Journal. Tim, I was going to ask you as well about the significance of Tesla joining the S&P 500, both for the stock and for the company. How big of a milestone might this be, and do you think it would really happen?
Well, it would be two things. It would be prestige. It would be kind of a recognition of Elon Musk's vision and dream for the past 16, 17 years to bring the electrification of the automobile to the industry and to essentially rise to the ranks that he would be part of, the benchmark index for U.S. equities. A huge win in that regard. But for the investor, a big win, because usually the stock has the run-up when they get put into the S&P 500 as index funds race to put that in there.
Let me pause this here and we'll come back to the video a bit later. Basically, the inclusion in the index is huge for Elon Musk. As stated, it is a recognition and a testimony that he has managed to make a huge impact by bringing electric vehicles to the market. But also, the second aspect is the great benefits for investors. With a market capitalization of about $250 billion, Tesla would be among the most valuable companies ever added to the S&P 500, larger than 95% of the index's existing companies. It would have a major impact on investment funds that track the index. Reuters has a really nice scatter plot representing visually how Tesla would compare to the rest of the big companies in the index. If Tesla were to join the S&P 500, the automaker would be among the companies with the highest market capitalization and the smallest profits. So ahead of the inclusion, analysts are trying to predict what would happen with the Tesla stock price. For example, Howard Silverblatt, a senior index analyst at the S&P Dow Jones, had to look back to the dot-com era to recall a comparable example. In 1999, he says, Yahoo surged 64% in 5 trading days between the announcement that it will be added to the index on November 30th and its actual inclusion, which was done on December 7th. Yahoo's market capitalization at that point was about 56 billion. The lessons learned from Yahoo was that when you have a company that's about to be added to the index, you should already own that company, or at least a little bit of it. If you had to wait until it's added to the index, you were actually paying a heck of a premium compared to owning it a week earlier. So this explains why Tesla's stock price went up above the $1,500 mark, as people think they need to own it before its price speculatively goes up to, who knows, $2,000 or $3,000 or maybe even $4,000. Let's get back to the CNBC video.
Though the benefit might be short-lived, usually about a year later, the research shows those equities then decrease in value. They trail behind the S&P 500.
Tim, do you think there would be some reluctance because the stock price run-up has been so sharp? I mean, wasn't the stock, it was below 300. Did it go below 200 briefly early last year? This has been a huge run. It makes Elon Musk like the 5th wealthiest person in the world. Would that be reason for pause to say, let's make sure that this is for real? I mean, again, that's just the stock price portion. The profitability should speak for itself theoretically. I just wonder if that kind of parabolic move would cause some hesitation.
Sure. Some investors don't want to get near Tesla. They're concerned about the fundamentals of the business. You look at longtime observers of the auto industry.
It is interesting what Tim mentions, that research shows after about a year in the index, companies tend to decrease in value and trail behind. In other words, nothing is certain. We don't know if Tesla's price will always be going up once in the S&P 500. There is no guarantee. One thing is certain, however, if Tesla makes it to the S&P 500 index, you have all the various S&P 500 offerings and similar index funds that have no choice but to include it. And additionally, actively managed investment funds that benchmark their performance to the S&P 500 will be forced to decide whether to buy Tesla or not. Even if you don't like Tesla and you think it is overvalued, the fact that it's going into the index would mean trillions and trillions of dollars would be invested in Tesla. As part of their benchmark, portfolio managers would not be able to ignore it. This is why I believe that if you own the S&P 500, you will own Tesla once it's added to the index without you having to do anything. You don't have to deal with the huge price swings and speculations. Alright, thank you guys for watching. I hope you learned something new today on investing. If you enjoyed the video, make sure to destroy the like button, and as usual, if I missed anything, drop it down in the comment section below. And if you're new here, please subscribe for more videos and real investing advice. Check out some of my other videos from my investing playlist where I talk about the most important topics and teach you what to do. So, until next time, stay the course and keep investing on a regular basis.